If you've always thought that to be a real estate investor you need millions or deal with the hassles of being a landlord, I have good news for you. Today, we're going to talk about a method that's transforming the way people invest in real estate. REITs. Real Estate Investment Trusts, or REITs, allow anyone to participate in the lucrative real estate market without the traditional complications. In an economy where housing prices keep rising and affordability seems out of reach for many, this tool has democratized investing. Did you know that more than 80% of people who invest in real estate indirectly do so through REITs? And you can too. In this video, you'll learn what REITs are, how they work, the opportunities they offer, and the mistakes you should avoid. We'll also explore how you can start investing strategically and what trends promise to shape the future of these investments. Stay tuned, because this knowledge could be your gateway to financial freedom. A REIT, or Real Estate Investment Trust, is a company that owns, operates, or finances income-producing properties. The key is that it allows anyone to invest in real estate similar to how you invest in stocks. Key points. History of REITs. They were created in the United States in 1960 with the goal of making real estate investment accessible. Today, more than 35 countries have legal frameworks for REITs, from Japan to Brazil. Basic functioning. REITs raise money from investors and use it to buy and manage properties. The income generated, such as rents, is distributed to shareholders as dividends. Immediate diversification. By investing in a single REIT, you can be a co-owner of dozens or even hundreds of properties, such as hotels, shopping malls, offices, or homes. Example: a REIT like Prologe invests in logistics warehouses. If you buy shares, you are supporting a key sector in e-commerce while receiving regular dividends. Globally, REITs manage more than $4.5 trillion in assets, and in the United States alone, they generate $130 billion annually in dividends. Now that you know what a REIT is, let's talk about the different types that exist and how to choose the one that best suits your needs. Not all REITs are the same. Choosing the right one depends on your financial goals and the sectors you're most interested in. Equity REITs. These own physical properties like shopping malls or office buildings. They're ideal for those looking for stability and regular earnings. Mortgage REITs. Instead of properties, these invest in mortgages and loans related to real estate. They offer higher returns, but with greater risk. Hybrid REITs. These combine physical properties and loans, providing an interesting balance between income and diversification. Sector specialization. Some REITs focus on specific sectors like hospitals, data storage, or renewable energy. This can offer unique returns in growing markets. Tip: before investing, research which sectors the REIT specializes in and how it has performed in recent years. Knowing the types of REITs is the first step, but now we need to explore the advantages and risks they offer. REITs offer great benefits, but they also have challenges. It's crucial to know both to make informed decisions. Benefits: accessibility. You can start with small amounts from $10 on platforms like eToro or Robinhood. Steady returns. REITs distribute at least 90% of their income as dividends. Diversification. By investing in REITs, you reduce risk by not relying on a single property. Liquidity. Unlike traditional real estate, you can buy or sell REIT shares quickly. Risks. Market fluctuations. Like any stock market investment, REITs are subject to volatility. Economic impact. Recessions or changes in interest rates can affect income. Management dependency. Results depend on the skill of the REIT managers. Example: during the pandemic, REITs focused on office spaces suffered losses, while those specializing in logistics grew significantly. Now that you know the pros and cons, let's look at the most common mistakes investors make and how to avoid them. While investing in REITs may seem simple, there are common traps that even the most experienced investors often overlook. Avoiding them will not only protect your money, but will also increase your chances of success. Common mistakes and how to avoid them. Obsessing over high yields. It's tempting to choose a REIT just because it promises high dividends, but these can be unsustainable. An excessively high dividend can be a sign of financial trouble or poor management. How to avoid it? Check metrics like the payout ratio or the proportion of earnings that are distributed as dividends. A ratio above 90% can be risky. Example: during the pandemic, many REITs with high dividends plummeted due to the decrease in rental income. Investing without understanding the sector. Not all REITs operate the same way. Investing in one specializing in hotels, for example, requires knowing how the tourism industry fluctuates. How to avoid it? Research the economic factors that affect the specific sector of the REIT you plan to invest in. Not considering diversification, putting all your money in a single REIT or in a single sector can expose you to unnecessary risks. How to avoid it? Spread your investment across different types of REITs. For example, mix sectors like healthcare, technology, and retail. Ignoring the impact of interest rates. When rates rise, REITs tend to lose their appeal as other fixed income investments can become more profitable. How to avoid it? Stay informed about monetary policies and review the historical performance of REITs against changes in interest rates. Avoiding these mistakes can make the difference between a successful investment and one that only generates frustration. Now that you know what not to do, it's time to learn how to start off on the right foot in this market. Investing in REITs isn't complicated, but doing it strategically requires knowing certain key steps that maximize your chances of success. Define your financial goals. Are you looking for consistent passive income, or are you interested in capital growth? For example, if you want regular income, high-dividend REITs might be ideal. Example: if you plan to retire in 10 years, a diversified portfolio of dividend REITs can complement your pension. Choose a suitable investment platform. Make sure to select a reliable broker that offers access to REITs. Some popular brokers are Fidelity, Vanguard, or Robinhood. Tip: check for commissions and hidden fees, as these can significantly reduce your returns. Research before buying. Review the REIT's history, its financial performance, the sector it operates in, and its dividend policies. Useful tools. Platforms like Morningstar or Yahoo Finance allow you to compare REITs and analyze their performance. Diversify your portfolio. To reduce risk, spread your investment across different sectors and geographies. Example: combine a logistics REIT with a healthcare REIT and a residential REIT to balance stability and growth. Monitor regularly. REITs are exposed to market changes such as economic fluctuations or interest rate adjustments. Tip: set up alerts for relevant news about the sectors where your REITs operate. By following these steps, you can build a solid portfolio that allows you to take advantage of the benefits of REITs in a safe and profitable way. But before moving on, let's see where the REIT market is headed in the future. The real estate market is always changing, and REITs are no exception. These trends can help you find key opportunities to maximize your investments. Rise of data centers and logistics. With the growth of e-commerce and digitalization, REITs focused on storage and servers are leading the market. Example: companies like Equinix, a REIT specializing in data centers, have grown exponentially thanks to the demand for cloud services. Sustainability and renewable energy. REITs that invest in energy-efficient properties or green infrastructure are gaining ground. Fact: according to a Deloitte report, sustainable investments will attract over $1 trillion in the coming years. International expansion. REITs are growing in emerging countries like India and Brazil, offering new opportunities for global investors. Tip: research international REITs to diversify your portfolio geographically. Adapting to hybrid models. The pandemic changed the way we use physical spaces. Office REITs, for example, are innovating to adapt to hybrid work. Example: REITs like SL Green are redesigning offices to include collaborative and technological areas. These trends are not only shaping the present, but they also allow you to anticipate and strategically position yourself in the market. And speaking of strategies, let's talk about how REITs can be a key part of your long-term investment plan. REITs can be a powerful tool to diversify your portfolio and reach your long-term financial goals. But how do they fit into a complete strategy? ideal complement to other assets. REITs work well alongside stocks, bonds, and index funds, offering a balance between passive income and growth. Example: if you have a traditional portfolio with 70% in stocks and 30% in bonds, including REITs could add stability and income. Protecting yourself against inflation. Historically, real estate has been an effective hedge against inflation, and REITs are no exception. Fact: during inflationary periods, REITs tend to increase their dividends to stay competitive. Smart tax strategy: REITs distribute most of their earnings as dividends, which can be advantageous depending on your tax situation. Tip: consult with a financial advisor to optimize your taxes. Including REITs in your financial strategy not only diversifies your portfolio, but also positions you to obtain consistent income and take advantage of real estate market opportunities. From understanding what REITs are to identifying common mistakes, future trends, and complete strategies, this video gives you the tools you need to start investing with confidence. What are you waiting for to explore the world of REITs? If you found this content helpful, subscribe, share, and comment. Do you already invest in REITs, or are you considering doing so? The conversation starts here.